In this video, we are going to discuss what is important to day traders, and now it's all about inflation. Why should day traders embrace inflation? I'll give you the answers coming up. Now, why is volatility your friend, not your enemy? It's quite simple. Wider ranges. We need to have those big moves in the stock market. You need to have trades come to you. You need to hit support. You need to hit resistance. This is what the market's all about, hitting levels and actual movement. Inflation, as the market goes down, it gives us those moves. That's what we're waiting for, right? So VIX, what is the VIX? Well, the VIX is a measure of volatility. It's used as a front month contract. So right here, you're gonna see a chart of the VIX. It's pretty cool. It goes up and down. It's used as a trading vehicle. As traders get more fearful in the market, the VIX goes back up. A traditional bottom for the VIX is around 10 to 12. That's a great, healthy market. Right now, we're hovering around the 30 mark. There's danger in the waters. How is VIX controlled? It is used by purchasing front month contracts, both puts and options, put into one bag and given to you as a trading tool. The VIX is a great tool to use to judge where we are, what ranges are we at. As the VIX increases, it provides more fear to the market. We're actually looking for more volatility, and you can look at the VIX as a trading tool for this. One very important aspect is, as traders, we have to let the market tell us what to do, right? If it's going to be a down day, look to short. If it's going to be an up day, look to go long, right? The trend is your friend. There's nothing more important. So what you're going to try to do is find a beta of a stock. And what that means is, what is the relationship between the stock and the index? So Apple's beta will be pretty close to 1 if you're going to look at the NASDAQ, and a little far off from that for the S&P. Why? Because Apple's weighting in the NASDAQ is simply larger than it is in the S&P. So as you're sitting there watching Apple move, make sure that you're in the same direction of the market. That's what the beta is. So you want to play trends. But when you're playing trends, don't forget that there can be counter trend rallies, right? So there could be an up market, there could also be a down market. But some of the biggest traps are what we call bull and bear traps. So the market gets too excited one way or the other. So that could be a bull trap. Meaning the market just goes up one day 2 or 3%, and then people get excited, right? I want to buy stock. I cannot believe the market's going up. I've missed my call on the bottom. But you know what? They're just trapping you. The market's going up today just so we can short it tomorrow. So you have to be very careful of that. Do not get caught. And how do you not get caught? Use stop orders. Make sure that you have those ready to go. Inflation is awesome, volatility is awesome, but you got to remember, as day traders, you have to have your ins and your outs. You want to trade with the trend of the market. Remember, bear markets means we're going to the downside, bull markets means we're going to the upside. Pay attention to inflation data to figure out where the trend is. So now the idea is, what do we look for when we're trading into volatility, into this big inflation print? Well, we're looking for breakouts. And what is a breakout? Simply put, you either break support or you break resistance, and then it's go time. So right here, support and resistance, here's a good example. You could see support down here at 106, held no problem. But look, where do we go long? Why do we not go long in the middle here? Because we don't have a confirmation of a resistance break. Well, right here we have it. So hit it goes, boom goes the dynamite right up to the upside. You have to be patient when you're looking at breakouts, right? And here's another example. Check out the momentum in this stock. You can see momentum is key. But what do you need if a stock is breaking out? 2 key things: volume and then relative volume. If the stock's not doing volume, then it's not going to matter. But what does relative volume mean? How much volume does it do with respect to its past? If Apple's only averaging 30 and today it does 60 million, that's the kind of stock you want to look for. Something that is trading aggressively and there's other traders on it. That's what you want. You want breakouts with volume and volatility. That's the key to that trade. I hope you enjoyed that video on embracing inflation and volatility. Make sure you join us daily at 8:30, where we run down this and many more topics, plus live trading. Follow us at TraderTV.Live, and you will not regret it.